Hi, didn't see you there. Welcome to the Monday morning Kwak Brothers live Q&A. Now, I know what you're thinking, but Daniel, this is Labor Day. What are you doing in the office? Why aren't you at home watching Fixer Upper with a bowl of ice cream on your lap? Well, guess what, people? Labor Day is for people who work. I don't work a day in my life because I love what I do, all right? And I know, very cheesy, extremely cheesy. But I genuinely love doing this. I love real estate investing. I eat, breathe, sleep real estate investing. So there's honestly no other place I'd be than here, right? Maybe like Disneyland. But other than that, I actually never even been to Disneyland. Fun fact about me. Never been on a roller coaster that I've actually enjoyed. But I'm still here delivering content to you guys. It's Labor Day, I know, but if anything, Labor Day is the day where you want to do what you love the most. And guess what, baby? I'm doing it. This is what I love doing the most, is sharing my real estate investing knowledge with all of you. Now, a little different setup, I know, right? We got the monitor. I'm standing. I look like a college professor. But we are actually right now in the midst of recording one of our latest classes that we're going to add to the Kwak Brothers education curriculum. So I've been recording all morning with Dave and Chris here in the studio, and I will be recording also all afternoon. So it's going to be fun. So for a lot of you that are students of the Kwak Brothers Real Estate Investing Education family, right? I don't say program, I say family because that's what we are. You will be having a new class on the way, which you don't have to pay for, because for us, it is complimentary lifetime access that we give to our students. So hello, Matt Smith. How are you? Hope everything is well. So I've been doing this thing. I did this thing last week, and I really enjoy it. And I know we've got about 7 people watching right now. And I told Dave and Chris right before we get on, like, listen, man, I'm not expecting any more than 10 today, just because it's Labor Day. People are probably out, and it's good because for us that are watching, right, whether it's the 7 of us watching right now and the people watching this recording, listen, man, like we don't, there's a limited amount of real estate that's out there, and we need 7-8 people to conquer it all, right? So for those of you guys that are watching, or you're watching the recording, congratulations. Know that you are one step ahead of everybody else out there. 8, there's 8 of us. Man, we have to share with one more additional person now, right? No, right? That's the knowledge and the mindset of scarcity. We want to have that. But I did this thing last Monday, where I asked people where they're from. So we've got about 9. I'm asking people where they're from, and I give kind of my synopsis on what I think about that real estate market or that region in terms of investing. So if you guys want to go ahead and put where you're from, I guess I'll start out with me. I'm from Chicago, Illinois. The greater Chicagoland area. Right now I live in a suburb called Aurora, right? My office is here in a place called Warrenville, Naperville area. Now, what do I think about the Chicagoland rental market? What do I think about our market? Well, the biggest thing that stands out to me is that the fact that a lot of homes under 200,000, there's not enough inventory, right? Meaning these houses are going fast left and right and left and right. I think it's a great rental market, but at the same time, I also can't ignore that we have one of the highest tax percentages, brackets, I guess, so to speak, out of the whole country, I think. Like, so for me, on my rental properties, the properties I own in not Cook County, which, by the way, Cook County is Chicago metropolitan area, or the greater Chicago area, so they say. But the properties I own not in Cook County, I'm at around 15 to 18% of taxes in my gross income, meaning that if I rent something out for $1,000, my taxes are going to be $170 a month, right? In parallel with my income. But on the other hand of the spectrum, it is a great rental market because, our state has a +3 population increase, and that's primarily compiled of millennial immigrants. So people my age who are immigrating from other countries for education purposes, I'm assuming, and also to find a job. And I'm not going to lie to you guys, there's a shortage of competent labor here in Illinois, and I think there's a shortage of competent labor around the country. I genuinely do believe that. So great rental market right out of the gate. Homes for under $200,000, not enough inventory. Houses over $350,000, however, really tough to sell. Really tough to sell. I'm seeing homes, luxury homes that were listed for $1.2 million 3 years ago, and now they can't even sell it for $750,000, right? So if you are a very wealthy individual living in Illinois and you're planning on staying in Illinois, which a lot of wealthy individuals are moving out, congratulations, right? You have a bona fide opportunity. Matt Smith from Colorado doing flips, Nebraska, wholesale in Vegas. I love it. I think we talked about that last week. I have a friend that does a lot of flips out of Fresno. Maybe your friend is Theodore Bernard because he's from Fresno, California. California overall, very interesting market, obviously a very expensive market. I wouldn't want to do deals there right now unless you can get an extremely low acquisition cost. If you can get a very low acquisition, then yeah, do it. Do it all you want. Bobby Simpson. What's going on, Bobby? I think I've heard of your name a couple times. Bobby Simpson, Seattle, Washington. What's your thoughts on investing in this area, rental and flip? So I haven't been to Seattle in 8 months. I think the last time I've been to Seattle, 8-9 months. And when I went out there last time, I remember seeing a crap ton of construction, a lot of construction. I saw a lot of high rises being built. I saw a lot of great things being built overall. I know Amazon is out there, but I also know y'all's have an extremely, extremely expensive real estate market right now. Like your median income to rental ratio is just dog crap. Like it is terrible. Like it's awful. So Bobby Simpson, I would recommend that you think extremely hard about investing somewhere else besides Seattle, Washington, especially in the metropolitan area. And I'm one of those guys where, I believe for a lot of the private investors, guys like us, the mom and pops, they're not a huge institution, right? Where it's like a real estate investing trust where they have hundreds and millions of dollars, sitting at bay. I don't know if I want to deal with that type of pressure, right? It's a lot, right? Or maybe I'm just not there yet. But unless you're there at that level, usually my recommendation is stay away from the metro areas. I'm not a big fan. I think you get much more bang for your buck in the secondary and the tertiary markets. I'm not a huge fan of that whatsoever. And Bobby Simpson, I don't know why your name sounds so familiar. I really don't. But I know when it comes to a lot of out-of-state investing, it does help to have, my first deal out of state, I had somebody help me. So I had a mentor, and the first deal I ever did out of state, I think it was about a couple years ago. But I had a partner, but at the same time, I also had a mentor who really walked me through that process. And that was really helpful. That helped me avoid a lot of mistakes, a lot of red flags that would have cost me tens of thousands of dollars. So, Bobby, thank you. Thank you for your entry. All right, Theodore Bernard. Sellers here aren't really interested in seller financing. It's California. What a surprise. I've got a conventional loan to purchase properties, but have been beat out by cash buyers who actually even offer less. Yep, that is absolutely true. A lot of sellers are afraid of an upcoming recession. Therefore, they want cash and they want to close very quickly. So that's not a surprise to you at all. I myself am selling a portfolio of 14 properties. I want to sell quickly, just like anybody else, right? So cash offers, I've been giving out significant cash discounts for people who have cash offers. Really, really good stuff. All right, what's up, Daniel? Atlanta, Georgia market. So Robel Caltiso, thank you for that question. I actually think you asked me that question last week. I know I talked about Atlanta last week. So if you want to go back and watch the recording, you can do that. But my overall thoughts on Atlanta is I love the Atlanta market. I know Chick-fil-A has their quarters in Atlanta, so I think so. So that's a reason for me to love Atlanta. I did some research on Atlanta actually in the last 6-7 days, and Atlanta actually has one of the most impressive income to rent ratios in terms of potential. Now, I know a lot of millennials are moving to Atlanta. It's one of those cities that a lot of millennials are moving into. That's right up there with Denver, Colorado, Charlotte, North Carolina, Atlanta, Georgia is one of them, and Texas, right? A lot like Dallas and Austin is one of the cities that a lot of my generation is moving to, especially the ones who make good money. So I love Atlanta. I know there's a lot of new builds going on in Atlanta as well. A lot of investors have caught key. So a lot of these markets, a lot of these hot markets, I'm of the same connotation that I am looking forward. I'm looking forward to where a lot of these over-leveraged properties are going to be for sale. Okay, Matt and Theodore are having a conversation. Matt and Theodore, you guys should network with one another. Get each other's emails, phone numbers, etc., whatever it may be, and connect. All right, so that's good. I think I'm going to do that every single week, right? Where you kind of tell me where you're from. I kind of give you my overall connotation of what that market's like. I'm going to do more research on these markets. It's something that I do kind of on a daily basis. But usually I do it with the places I personally invest. Right now I'm investing in a specific town in the state of Florida. I'm not going to share that town with you because there's a lot of insider knowledge that I have been asked to keep by my partners through signing a non-disclosure agreement. But I'm investing in a lot of places in the South. Let's just put it that way. All right, today's topic: how to raise money. Now, here's my thing on raising money. I always tell people, if you're asking me the question, Daniel, how do I raise money? Not only is your raising money game messed up, but your whole entrepreneurial real estate investing business game is messed up. Because guess what? If you're asking me, how do I raise money? You're struggling with raising money. If you're struggling with raising money, guess what you're not doing? You're not going out there and you're not solving problems. Because if you're out there networking, solving problems for individuals, you would have eventually come across the person who's got a lot of money, who's got $1 million, and they just don't know what to do with it. I come across those people all the time, right? Whether it's through YouTube, whether it's through my meetups, my local meetups, which, by the way, if you're in the Chicagoland area, I host a meetup every Saturday. Not every Saturday, I'm sorry. Every first and third Saturday of every month. Next meetup I'm holding is, let me pull up the calendar here. It will be the 7th, right? So the next meetup I host will be September 7th in Naperville on 1451 Raymond Drive, which sucks, right? Because that's when Khabib Nurmagomedov is fighting on Saturday, so I'm going to miss that fight. But it's okay. It's all good. I'll know who wins. So raising money. I know that if you're asking me that question, I know that you're not out there actively solving people's problems. Because let me ask you guys this question. Do you think there's more people who have money and don't know what to do with it, or there's people who actually know what the heck they're doing in the world of real estate investing? I would make the argument that for every one person that knows actually what they're doing in the world of real estate investing, there's 100 people who have at least $100,000 saved up cash in their bank account, at least. Right? Or they've got it available in their IRA, 401k, retirement plan, life insurance, whole life cash value policy, whatever it may be, right? I guarantee you there's at least, the ratio is at least minimum 100 to 1, right? 100 to 1. And I've got a lot of investors today. I've got a waiting list for people who want to invest with me. And so I know, right? And like, I don't want to say that I'm smart, but let's say that I've done a lot of research, and the fact that I've notified my investors of saying, listen, we're not aggressively buying right now. Like I know the last time I bought an apartment building was about 2-3 years ago, right? I'm not aggressively buying apartment complexes right now just because there's a lot of money that's on there. The only thing that I'm really doing with larger apartments is wholesaling them, because there's a lot of people buying large apartment buildings, people who I cannot compete with. I'm talking about the Chinese buyers who will have no problem buying it on 2-3-4% cap rate. I can't compete with that. Nobody can compete with that. I'm talking about the REITs who have $500 million saved up in their cash reserves, and they're wanting to get into real estate like right now, right? There's no way I can compete with those guys, because for me, when I buy a building in a Class B, Class C area, I want minimum 7% cap rate. If I can't get that, then I'm not going to get into the deal. I'm not going to put my investors in that position. So a lot of my investors know. I notified them that, listen, we're waiting for the right opportunistic time, right? That's what we do. We look at deals from a big picture standpoint and a small picture standpoint, right? So raising money, if you're out there solving problems and considering the ratio is 100 to 1, you should have no problem raising money. Okay, Denise asks, hi, do you happen to know how the Big Bear Lake Arrowhead market is doing? Seems like their prices are sporadic. I'm wanting to purchase for my son and I. So here's the thing. I want to be careful because, yeah, a lot of you guys put a lot of importance on where you invest. A lot of people say location, location, location. I understand that. But listen, it's not as important as you guys think it is, right? Like where you invest, like what city, it's not as important as you think it is. At the end of the day, we're talking about margins and differences that really are not that significant. Like if you take the best rental market compared to the lowest rental market, it more so depends. It's literally going to be $200-300 a month in cash flow difference in terms of bang for your buck. You know, it's not as big of a gap as you guys think it is, nor will it ever be. I think as long as there's people out there paying rent, people who need housing in all areas of the country, there will be an investor there who will identify and see ways to make money. So eventually what I'm saying is it's going to be, it's always going to be a level playing field, so to speak, right? But what's more important is your business plan. How good are you as a landlord? How good are you as a real estate investor? Do you have a coach? Which I said time and time again. Having a one-on-one coach is arguably the most important thing you will ever have in the world of real estate investing. It is super, super key. And I'm not just saying that because I offer one-on-one coaching. I'm saying that because, excuse me, I've had multiple one-on-one coaches, and all of them I paid for. Guys, there was a program where I paid $25,000 for just 6 sessions in the one-on-one coach, right? I've paid $15,000 for 10 coaching sessions, right? Like I've done that before, and it is the most important thing you will ever have for your real estate investing business. So I always say, guys, it's more dependent on what your business plan is like. How good of an investor are you? How good are you at reading the markets? How good are you at dealing with tenants? How good are you at setting up software systems? And how good are you at raising money? All these different things that we're talking about compared to where you invest, right? Because at the end of the day, business is about people, right? It's always about people. Matt Smith, going to be a good fight. Yeah, absolutely. I don't know. I personally think, and for those of you guys that aren't fight fans, I apologize. But for those of you guys that are, I personally think Khabib's going to lose. I really do think so. He doesn't really have that good, strong of a chin, and Dustin's a very long power boxer. So I don't know. I honestly don't think Khabib is that much of a dominant than Dustin. I actually think Dustin's got a chance. I actually take Dustin. I'm not as weird as it sounds. Khabib is 27-0. I'm gonna take Dustin on this one. Oh, all right, guys. So for just a reminder, if you guys could like this, give this video a thumbs up, this live stream a thumbs up, that would be greatly appreciated. It supports the channel very much so, and it allows us to keep doing what we're doing. So I would really appreciate that if you guys would. All right. So if you guys don't have any other questions, let's go ahead and continue the raising money topic. And while I'm gonna get some water here. Really, really thirsty. Okay, cool. All right. So let's go ahead and talk about raising money. And if you guys have continued questions, let's see, Matt Smith, I think he will win. He will wrestle it to win. Yeah, probably. It'll probably be a decision win for Khabib. But anyways, yeah, any questions that you guys want to put on here, feel free to put on the live chat. But let's go ahead and talk about raising money, right? So raising money, we obviously talked about go out there, solve the problem. And usually what I do when I raise money, whenever I go to a networking event, whenever I go to family gathering, and a lot of people ask me, where are the best places to raise the money? So in my opinion, some of the best places to raise the money are the ones where you wouldn't expect it, So I've had sellers who not only sold me their property, but they became my investors afterwards. And it's like one of those things where I know you have the money because I gave it to you, right? So it's one of those things as well. Meetups, one of the best things that I've done to raise money is to start my own meetup, start my own mastermind. I used to run a mastermind group before I have the meetup I have now. And in that mastermind group, I've had about 40 to 50 people that showed up on a weekly basis. And I've actually raised around 2-3 million just from that group alone. So YouTube channel, I know by me having this YouTube channel, I've raised a good chunk of money as well. Facebook groups, by moderating Facebook groups, I've raised a good chunk of money. And a lot of the money I've raised, I've just kind of met people by networking. So I've gone to different networking events, which, a lot of networking events can get a little tiring because you kind of get in this rut of you meet the same people over and over and over again, So that for me has been the most productive. But, there's a lot of potential investors everywhere. So, church groups, I go to different meetups a lot of times. Like recently, I just joined this meetup to play soccer. I love playing soccer. I've gone there and I've, conversated with some new individuals. I've raised money from the gym locker room. So like meeting random people, gym locker room. I've investors through referrals. That's another big one that people have referred investors to me, actually. So there's a lot of different ways to go about it. But usually when I meet the individual, I'll meet with them one-on-one. So one-on-one time is extremely pivotal. And one of the things that I usually say is, hey, listen, we're on this call, we're in this meeting, we're having this lunch. The reason why I want to go out with you or have this call with you is because I want to see if we're a good fit. So I've got a lot of investors that I'm working with, and I'm sure you've got a lot of opportunities to invest your capital. Let's see if this can work. Let's see if we're a good fit. And this is where I usually ask questions about them. They ask questions about me. I hear their story. I share my story. And this is key. One of the biggest weapons or tools, I don't want to use the word weapon because it sounds very hostile, but one of the greatest tools that you will have as a real estate investor is your ability, when raising money, is your ability to tell your story. A lot of times stories are what engulfs people. And the psychology of the way somebody makes a buying decision is that they actually buy with emotion, right? And they'll justify with logic. And that happens with any sale. You look at any commercial, right? Like, and these commercials even today don't even make sense, right? Like you'll have a happy family, you'll have a husband, a wife, and 2 children. They'll be giggling and laughing in bed together. The sun is perfect. It's a beautiful day out. And at the end, it'll just be like, stay thirsty, my friends. You know what I mean? Like these commercials won't even make sense. But they're trying to get you to buy through an emotional reason and to justify it with logic. Now, how do you justify it with logic? Well, you tell your story. You get in a very emotional and relatable connection with that individual. Because I always say, you never try and recruit investors, always try and make friends. That's my motto. That's my MO a lot of times with investing, because that should be true. You should consider your investors to be also your friends. You should have a relationship with these people to build trust, right? Whatever it may be. Now, how do you justify with logic? Be a good investor. That's it, right? My motto as well is, when it comes to raising money, is be the investor that you would want to invest your own money into, right? When you get to the point where you can't imagine anyone else that you would want to have capital under, congratulations. You are at that level where you should be raising money. And I always say, like, people ask me all the time, Daniel, how do you raise money? My response 99% of the time is, number one, are you the person that should be raising money in the first place, right? Should you be raising money in the first place? Meaning that, are you good enough to the point where somebody will give you their life savings of $500,000, $1 million, whatever it may be, and you have the ability and the expertise to be able to do something with it. Now, if you're a newbie, right, because you kind of have to gain experience somewhere, have somebody help you. Get a one-on-one coach, right? In my life, I've had 4 different one-on-one coaches. 1 for business, 3 for real estate. 4 one-on-one coaches that I've paid for, right? I've paid at least minimum tens of thousands of dollars to have in my arsenal, in my corner, so to speak. So if you don't have that expertise or experience, start with the one-on-one coach, right? You don't have to give them equity. That's why you give them the coaching fee, whatever it may be, right? That's what I would do, right? Ajay, how much do you start by investing if it is from personal funds? So I honestly wouldn't be able to tell you, because when I first started real estate investing, I was broke as a bat. I had no personal funds of my own. Now, I know that if you invest with your own personal funds, that's great, but eventually your personal funds are going to run out. So I always say the art of raising money is always something that should be learned, especially if you're an individual that's looking to scale your real estate business. A lot of investors that watch this live stream, I know, don't want to stop at 5 or 10 units. But if that's all you want, like all you want is, you just want 10 units to live off of, 10 units, and you're cash flowing $5,000 a month, and that's all you want, and that's all you're looking for, then great, awesome. But I know a lot of individuals, especially those people who are on this live stream and want to invest in real estate, they want to do it at a higher level. They want to amass $1 million portfolio or $2 million portfolio or $10 million portfolio. That's where they want to go. So if you want to get there, you probably want to learn how to raise money. Bobby Simpson asks, are you still doing one-on-one coaching? Where do you do the 2-day visits? That's probably where you heard my name, as I've been contemplating into getting more, but I like the Kwak Brothers. Oh, thank you, Bobby. Thank you for your support. Thanks for watching this live stream and being, I guess, engulfed, is that the right word, with a lot of the content that we put out. To answer your question, we are still doing one-on-one coaching, but I know I told Joel and Sam and a couple other guys in the office that I want to be intentional about bringing on specific numbers of people. So I think I'm only going to bring on like 12 to 15 more people for the rest of the year, me personally, just because I've got a busy rest of the year. Like, I'm getting married next month. I also got the honeymoon, and there's also a couple nonprofit events that I'm helping to plan. And I also know from my personal real estate investing business, I'm doing a lot of bigger deals right now that require a lot more of my attention. So do I still do the 2-day visits? So we still do them, but we changed it to where they actually come here to Chicago, and I think it's better because I get to give them a tour of a lot of the deals that I've done in the Chicagoland area. I could show them from step 1 to step 20 on how I executed those deals. But we also got a lot of great new things coming. We're doing a weekly study group with the people that's just in our one-on-one coaching. I'm starting to introduce a lot of my high net worth mentors to my clients as well. So we've got a lot of great things. We got a Kwak Brothers one-on-one coaching retreat that's coming up next year. So we got a lot of really cool things scheduled for our one-on-one clients. So in my opinion, now right now is you can't find a better time to get in our one-on-one coaching family, especially because right now with our one-on-one coaching clients, they're being offered unlimited sessions for life. But after the 12 people that we get between now or whatever comes sooner, 12 people or the end of this year, we're not going to be offering that. We're most likely going to be offering it only 10 sessions after December 31st or after the 12 people, whichever comes first. Which last month we've accepted 5 new clients and we've turned away a good number as well. So I know we get a lot of people applying and we turn away some people because there's people I just don't want to coach because I'm like, man, you got a crappy attitude or you're just not coachable. I don't want to spend time with you, or I don't think you're going to do anything with the information. So we're keeping it to 12 or December 31st, whichever comes first. We're going to put a limit on, the coaching session. But for right now, they're unlimited lifetime access, meaning that, it could be 5 years later and you could still book a coaching session, right? But congratulations on the weeding. Is that like lawn maintenance? I get what you're saying, right? So thank you guys so much. I'm definitely very lucky to be marrying Lisa. She's phenomenal. Steve Fernandez, I just did a refi, but only have $60K in equity. I want to lower my principal. Can I still do a HELOC? How much should I do a HELOC for? Well, it depends. What's your loan to value ratio? Meaning that how much is your loan compared to what is the value of your current asset. I always tell people right now, get lines of credit right now. You don't have to use it today, but at least get it right now. That way you have it. Because I know right now banks are looser on the lines of credit than usual. So I always say if you have a high income, even if you don't want to invest in real estate, just get the line of credit. There's no harm in getting a line of credit. You might get a hard inquiry on your credit report, but you get hard inquiries for anything else anyways. So I always tell people get the line of credit. But of course, that's me not knowing, Steve, what your loan to value ratio really is, right? I don't know what it is. Do me a favor, Steve. Email us at info@thekwakbrothers with much more detail, and I'll go ahead and have Sam or another one of our HELOC experts answer that question for you. Christopher, thanks, Chris. He said, congrats, Daniel. Chris is literally in the back there. Thank you. All right, so let's go ahead and continue with raising private capital. So usually in that one-on-one meeting, I share my story, they share. And after that, and only after that, do I ask the important questions such as, how much money would you like to invest? Are you interested in investing in a multifamily, single family? What are your goals? What's your preferred return on an annualized basis? What are you looking to get accomplished, right? And I always preface it with, now listen, obviously that preferred return, everybody wants to stay 12, 11, 13, 14, 15 on a buy and hold. Realistically, a good market number for a buy and hold is about 9%. 9%, right? 9 to 10% is typically a very good number for a preferred return on a real estate investing buy and hold. I usually try and aim for 11 to 12% for my investors because I'm a little bit more picky with my deals. And my investors know that whenever I bring them a deal, it's the cream of the crop. Because in 2019 so far, I haven't tracked the number yet, but I think I've received over like 400 or 500 deals. And I chose to execute on 2 of them, right? 2 of them. That's it. I'm that picky because that's where we are in the market right now. That's what I have to do. But I always ask the question. I always preface it like, listen, the higher your preferred return is, right? Like if you're going to tell me you want a 16% return, that's going to put you in the back of the line, meaning that you most likely will not get a deal for a couple years. But if you say, something more realistic, like 10%, 10, 11, then yeah, you will be most likely put in front of the line, especially if you're someone who's got quite a bit of capital. And today I'm at the stage in my career where I do have a limit. I usually don't allow people to invest with me unless they've got $100,000 minimum. Unless that's, so I do have $100,000 minimum in terms of people that invest. And I don't think that's wrong. It's just, I'm just at that stage in my career where if I'm going to raise money for an apartment building and the down payment's $500,000, I don't really feel like getting 10 people who have $50,000. That will probably be not good, right? All right. So how do you pull money out of a 401k and put it in a self-directed IRA? So you have to have a self-directed IRA agent. I know if you access the Kwak Brothers, and Matt, I'm not sure if you're a student or not, but I know that our students do have the resources for being able to access a good self-directed IRA agent. I personally use Inland IRA. They're a company, I think they're out of Chicago. Is it Inland? I don't know, it's been a while. But yeah, I usually, there's different IRA companies that you could use. Typically, if you consult your CPA or tax professional, they do have a self-directed IRA agent that they can connect you to. But you predominantly do it through a self-directed IRA. Just make sure you know the legalities around it, because I know everybody's situation is uniquely different. And I also know that when you're investing out of a 401k or an IRA for that matter, and you're putting it into real estate, there is that EBOOK tax where anything over $12,001 in net profit, you get taxed on a 37% tax rate. So that's the highest the tax bracket goes. So do be careful and be aware and be mindful that depending on how you structure, but if you typically straight take money out of a 401k or a self-directed IRA, you get hit with that EBOOK tax for any net profit over $12,000 or less, right? You just put it in a different bracket. Does the company have to be local? No, it doesn't. So to give you an example, one of my first, I think it was my first bank financing apartment. It was a 36-unit building. I actually had 2 investors from Tennessee, and they used my IRA company out here in Chicago to transfer funds from a 401k to self-directed. So it doesn't have to be local. Ajay said, let's say you're a beginner. What are some ideas one can be involved in? Is there a way you can be a middleman so you can learn more about real estate investing? I usually recommend have a coach, right? Because a lot of times, a lot of investors that are at a higher level, they don't want to give away equity to a beginner because, number one, it's very seldom that the beginner can continually provide value. I am of the belief and the notion that if you want equity in the building and you want to be able to collect cash flow, you should be providing continuous value. Meaning that if you find a deal for me, I'm not going to give you equity, right? I'm just not, because like I rather if the value that you provide is upfront. Therefore, I'm going to give you value in exchange upfront. I'm not going to give you continuous value for something that you only did once, right? It just doesn't make sense to me. But yeah, I would say Ajay, I would recommend having a mentor or somebody that will help you at least. So again, if you want more help, Ajay, email us at info@thekwakbrothers.com. Chris, can you actually type that in the chat box? info@thekwakbrothers.com. Or yeah, Dave or Chris, whoever. I'm gonna get a drink real quick. Okay, cool. So yeah, info@thekwakbrothers.com, info@thekwak brothers.com. Okay, so let's go ahead and continue on. And before we continue, okay, thanks, awesome guys, thank you so much. Feel free, again, a reminder to give this video a thumbs up, give us a like, subscribe to us really quickly if you could. That'd be greatly appreciated. Let's go ahead and continue on with the whole raising money topic. So there's a class that I put together on raising money. It's in the Kwak Brothers Real Estate Investing Education curriculum. If you're interested in that curriculum, again, there's the email right there. Feel free to hit us up. But let's go ahead and continue to talk about, Robel Caltisto asked, Daniel, can you explain what you mean by when you share equity? Okay, so this is where we talk about how to structure a deal properly. Now, there's 2 different types of investors. There's debt investors and there's equity investors. Let me first start with debt investors. So debt investors are when, let's say you and I are doing a deal, Robel, right? And I hope I'm saying your name properly, Robel. But let's say you and I are doing a deal. And let's say that I'm going after this 50-unit apartment complex. Let's say that I do owner financing. Let's say the 10% down payment that I need is, let's say, $500,000, right? So $500,000, or let's do a better example. Let's do $375,000 is the down payment. That implies that the purchase price would be $3.7 million. That would put the $75,000 per unit, just roughly about. Yeah, $75,000 per unit. Okay, so let's say $375,000 is what I need for 10% down payment to go to this owner financing deal. Now, Robel, if you are a debt investor, you and I are going to formulate a note, right? I'm going to put a note with you. I'm going to put that note in first position lien, right? First lien position to protect you, to make sure that I'm not just running away with your money or anything like that, or I'm going to push you out, right? But I'm going to put your note at first lien position, meaning that if anything goes wrong, you're in first position to receive all proceeds and gains from the disbursement of the property, so to speak, or the liquidation, whatever it may be, whatever happens, right? That's all legal mumbo jumbo. Now, what I'm going to do with this note is, let's say that we put this note at a 10% annualized return, meaning that I'm going to take your money, I'm going to put it towards this apartment, and I'm basically giving you 10% of that money on an annualized basis, which is, in this case scenario, $37,500 every single year. Now, whether those dividends get distributed monthly, quarterly, semi-yearly, or yearly doesn't matter, right? Typically depends on what the investor wants to do. I know a lot of friends that do syndications and they do monthly distributions, and that's cool too, right? I prefer quarterly. That way it's a once a quarter thing. You know, it doesn't put too much hassle on your accounting department or your bookkeeper or whatever it may be. But long story short, I draw up a note with you, 10%, you get that money guaranteed no matter what happens with my property, whether it's good or bad, you get that $37,500 or $37,500 every single year. Now, let's say that you are an equity investor. When you are an equity investor, that means that the entity that I purchase this building with, you have a percentage of ownership. So for me, usually my percentage of ownership for my investors are between 30 to 50% on apartment complex buildings. Now, what that means that let's say that net operating income, right, or let's say the cash flow, because I want to do net operating income minus the debt service. Let's say that cash flow for this building, right, if it's on a 10% cap rate, let's see, it should be 7,000. Yeah, so that cash flow should be around $50,000 to $60,000, right? Just estimated speaking, that's where it should be, right? NOI should be 375,000, and then divide that by 2. Yeah, so it should be around there. So the cash flow should be at around $60,000. Now that means, right, that 60 to 70,000. Let's just say 60 to 70, right? Just as a frame of reference, because I'm doing the math in my head, and then debt service should be around 30%, right? So let's say the cash flow is about $70,000. That means that if you owned 50%, right, which is we're sharing the equity, right? It means we share the equity in that building. You get 50%, I get 50%. That cash flow is $75,000. You get half of it, and I get half of it. But it means that you ride with me, meaning that if we have a bad month, we have a good month, right? You may not get as much money, but at the same time, you also take advantages of being an owner, right? You have the advantage of being an owner, meaning the tax benefits, the appreciation, that if that building goes up in value, your net worth gets higher as well. Whereas if you were a debt investor, you can't collect any tax advantages. The appreciation, the raise in value, right? It doesn't mean anything to you, all right? So that's why for me, I know a lot of the people that want to invest with me, they want equity because they know that I got a good business plan, I got a good team around me, so they much rather ride with me than not, right? Whereas a lot of investors who invest in deals who they may not have as much experience, they go with the debt route, right? Because they may not have as much trust or as confident in that person's ability as they would an expert, right? Or somebody who's been doing it a lot longer, so to speak. So I know for me, because of that reason, because of the equity sharing, giving of the tax advantages, I know a lot of investors that I work with are doctors. I know doctors love investing with me because they love having the tax advantages, but they just don't want to deal with the problems. They want to be more on the passive end. So, for the doctor and myself, it's a win-win, right? Okay, any more questions, guys? Some announcements. Obviously, we still have our free owner financing class that's out there. And again, guys, just a reminder, if you could give this video a thumbs up, if you could give this video a like, that'd be wonderful. It helps spread this video and this content. That way more people can watch it and enjoy this material. So if you could give this a thumbs up and also share this video, that'd be greatly appreciated. I know our goal is to get 50,000 subscribers this year. This month. So if you guys could help us reach our goal, that'd be wonderful. And we love putting out free real estate investing content out there for you guys. So, for me, it's always a pleasure. And, I know it's Labor Day today. I said it in the beginning of the stream. I know it's Labor Day, but as far as I'm concerned, I'm doing what I love. So this isn't labor to me. This isn't work. So there's no place I'd rather be than be here right now, right? And even if the lights and everything around me is super hot, I feel like I'm in a microwave, I'm being burned alive. I love doing this for you guys, right? It's phenomenal. So thank you, Dennis, Repetition, Miss Kowski. Thank you so much. Steve Fernandez, how do I find real estate property? That is a mouthful. So Steve, real quick, if you're a student with us, then there's a class in our curriculum called How to Find Deals. If not, feel free to email me at info@the Kwak Brothers, and I'll get you access to that. Now, when a lot of people ask me how do I find real estate properties, again, frame of mindset here, right? How do I find real estate properties? The same way I address how do I raise capital. If you're out there, you're solving problems, you would never ask me this question in the first place. Because if you're out there, you're networking with people, you're looking to solve problems, then you're not going to have that real estate, how do I find real estate investing deals, right? We all know that the deals are created. So if you're out there and you're looking for people and problems, not just properties, you will have an influx of deals. You will never have to ask me, how do I find deals? Because, well, you're addressing the people and the problems, not just the property. Gino Dalbis asks, what does share equity mean? So if you actually look at 3 people above you, Robel actually asked the same question. So feel free to go back about 10 minutes beforehand, rewind it, and you will know what share equity means. And again, guys, if you have any additional questions that I don't address here in this live stream, feel free to email me at info@thekwakbrothers.com, and I will get that question answered for you. So just put in the subject line, question for Daniel. If you put in the subject line, question for Daniel, then I will go ahead and address that for you. And also, same thing, if you want more information about the program, feel free to put in the subject line, question for Daniel, and put in the subject of the email, hey, I want more information on your real estate investing education program, and also potentially your one-on-one coaching. So if you guys want more information on that, email me at info@thekwakbrothers.com. Chris put it in the chat. Literally, it's five answers up. I think 5 chat things up. And put in the subject line, question for Daniel. So whether you have a question or whether you want more information on the program, put question for Daniel in the subject line. And in the body of the email, kind of just put what you're looking to get. What are your thoughts on buying single-family homes with the solar lease? What's a solar lease? I'm gonna look that up right now. I'm sure I know what it is, but I don't know the terminology. So power purchase agreement. You don't have to pay the high upfront cost of solar panels. What? All right, let me put solar lease, solar real estate. Oh, it's a financing option. Solar lease is a financing option for residential solar panels. So it's relative to solar panels. Okay. So I don't know. I don't know if I've ever bought a house that has solar panels in it. So you may have to do your own research on that one, Theodore. Sorry. Right. All right. Robel asks, Daniel, do you buy or sell notes? If so, what makes a good note? So right now we're in a time where the interest rates are extremely low. The bond market is doing phenomenal. We're seeing 2-10 yield curve inversions left and right. Treasury notes are at a very, very unique situation. The stock market is very volatile. So in those scenarios, I'm not a big fan of note buying. However, I've just identified, I actually recently got connected with an individual who does buy and sell notes, and we are going to start working on a note buying and selling program. We will include that in our Kwak Brothers curriculum. I know we're going to be starting on that here pretty soon. But for me, I'm not a big, I don't buy or sell notes. I do hold a note, however, right now, because I divested a property and I sold it on a note. But yeah, it's just really hard. If you're in a note buying business, it's tough because, I mean, if you think finding real estate properties is bad, if it's hard, finding notes is really hard. It is really hard. But at the same time, in my opinion, it's one of the most passive ways that you can go about real estate investing business. But yeah, I do not. To answer your question, Robel, I do not buy and sell any notes. I do have a note. What is a good note? A good note, I will tell you, that is a note that is seasoned well enough and to the point where you have good documents on the performer of the note, so whoever is performing on that building that provides the income for the note. So I'd say a good note is the one that's well seasoned and it's got a high rate, because that high rate is going to make it valuable compared to other bonds and notes in the market outside of real estate investing. How do you go from single families to multifamily? I've done a lot of single now, but know nothing about multifamily. Yeah, so Matt, again, I don't know if you're a student with us. Email me at info@thekwakbrothers saying questions for Daniel, because there are some things that you have to take into consideration. And I don't know if I can answer that in the 5 minutes I have left here. So email me, Matt, at info@thekwakbrothers.com. titled Questions for Daniel, and I'll go ahead and address those emails today. It's really popular in California. Solar company rent you the solar panels, pay you a monthly fee. Cool. My man just confirmed Troy Fullwood, note buying King Tour. All right. So for those of you guys, and what's up? What's going on, Bryce? Man, I got a lot of love for this man, Bryce McKinley. So for those guys that don't know, October 4th, 5th, there is an event that myself and my brother will be the keynote speakers at. We got about an hour and a half to share a new strategy that we're releasing. I've hardly ever shared it online before, but we've got Troy Fullwood coming. He's a note buying expert to our event. Bryce, if you could do me a favor, if you could type in the chat box the website that these guys can go and check this event out. It's going to be in Dallas, October 4th and 5th. We got a lot of great real estate investing experts that's going to come and speak. I know Bryce is going to come speak on wholesaling, which I know he's done over 6,000 wholesale deals in his career. So he's going to be speaking, we're going to be speaking, and there's going to be a lot of great individuals at this event. It's going to be an awesome time to network with one another and just to have fun, So go, I believe the website is marketdomination. I don't know, it's like mastermind.com, something like that. Let me look this up. Mastermind marketdomination.com. Is this it? Nope, that's not it. But I mean, go to our website at thekwakbrothers.com. You will see a lot of information on it. I know in the multiple Facebook groups that Sammy and I control, we put out this information a lot. I know it's also on. I think it's also on Meetup. It's also Eventbrite. I'm sorry, it's also on Eventbrite. So go to Eventbrite. It's something along the lines of like Mastermind Market Domination, something like that. YouTube won't allow me to post it. Oh, seriously? Man, that's dumb. That's really dumb. Bryce, where can they find this information? Let's do that. Where can they find this information? So yeah, Sammy and I will be the keynote speakers. We're really excited. It's going to be awesome. I believe we've already sold out of the inner circle tickets. So that's a shame, right? I wish more people could come, but that's a good sign, right? That we've sold out the inner circle. But we also have the VIP. And we also have general admission. I believe it's but yeah, if you go to thekwakbrothers.com, I'm sure you'll find this information somewhere. It's also on Eventbrite. It's happening October 5th and 4th and 5th. So if you're wanting to go to this event and get some knowledge, you'll want to be there. Absolutely. All right. So I'm going to go ahead, guys, and wrap this up. If you guys don't have any other questions, again, email me for any additional questions or comments, questions, concerns, whether it's on the program or whether it's a real estate investing question. Feel free to email me at info@thekwakbrothers.com with the title subject, Question for Daniel, right? So thank you guys so much. I'll see you guys next Monday at 11 a.m. Central Time. Have a good week. Go Bears!